Welcome back. You tune into Market Fatafat, where we are getting you all the top buzzers in the trading session, either on the back of news flow or on the back of technicals. And now on the technicals, we are joined by Rupak, who's a senior technical analyst, LKP Securities Ltd, joining us. Hi, Rupak. Thank you so much for taking the time out and joining us today. Rupak, coming to you for your first stock that you've picked out for us, that's M&M Finance. In fact, that particular counter has been moving up since morning. It's trading up 3% in today's trading session itself. Tell us from here on, do you see this counter to pick up steam?
Yeah, if you look at the counter, I'm not saying a big move from here, but a small kind of 4-5% kind of movement can be expected from the current level. So on the daily chart, we can see there is a consolidation, and today the stock has given a consolidation breakout with the rising volume. So to me, it looks like that 290 is going to come in the short term. So one can initiate a long position. He is crossed decisively, then only we can expect a rally towards 310. On the lower end, support is there at 269. If the stock falls below 269, then only there might be some problem. Otherwise, I think sentiment is likely to remain positive for the short term.
All right, so that's M&M Financial. That could perhaps see a 4 to 5% up move. But let's move on to the next counter that is in focus, Nuvoco Vitas. That is in focus now. This is in focus on the back of the fact that Vadraj Cement Limited, a wholly owned subsidiary of Nuvoco Vitas Corporation, is proposing to issue a private placement basis to proposed investors unsecured listed compulsory convertible debentures of different series for an aggregate amount of 1,200 crore rupees. On the back of this fundraise that they are planning to do of 1,200 crores, Nuvoco Vitas is in focus. That's trading up almost 1.5% in trade today.
Okay, so that's Nuvoco Vistas. The stock is buzzing on the back of that. But let's also put the spotlight on KEC and Kalpataru projects. Both these stocks in focus on the back of a brokerage report. In fact, we have Motilal Oswal, which believes the transmission pipeline continues to remain very strong, because of which they've given buy rating on both these counters, KEC International and Kalpataru projects. For Kalpataru, they've given a buy stance with a target price of 1450. For KEC International, it's a neutral rating with a target price of 950. They say transmission pipeline continues to remain strong. Interaction with the managements of KEC International and Kalpataru projects suggests that transmission ordering pipeline remains strong for the next few years. These companies are targeting HVDC projects, international opportunities and other non-T&D opportunities to grow, because of which their outlook on both these companies is very positive. They say commodity prices continue to remain in comfortable range, and hence margins are also likely to improve in FY26 and beyond. So buy rating coming in on Kalpataru projects, 1450 is the target price. Neutral stance on KEC, 950 is the target price, and both these stocks are in focus on the back of this Motilal report.
All right, so both Kalpataru and KEC in focus on the back of the Motilal report. But let's moving on to the next counter from the auto pack, Ashok Leyland, Rabinder. Again, a counter that is moving because of a brokerage note. Tell us what does the brokerage note say?
With a note on Ashok Leyland, and they have maintained their buy rating, and they have hiked target price to rupees 155 as compared to earlier target price of rupees 140. They have made a minor changes to volume estimate, reflecting a slightly better demand environment, partly due to cuts in the GST rates, and they have increased EBITDA margin estimate, better gross margin plus higher operating leverage, resulting in the EBITDA estimate increase by 4 to 6% over FY25 to 28, and they have also increased earning estimate by 5 to 6% over FY25 to 28. So back of this positive brokerage note from Citi, Ashok Leyland is in focus, and the stock is up 0.5%.
Okay, so Ashok Leyland holding on to gains of 0.5%, but let's put the spotlight on the real estate sector then, and DLF in particular. Rupak, on the technicals, what do the charts of this particular counter suggest?
So most of the real estate counters are looking positive for me in the short term. The index itself has not given a breakout, but it's on the verge of giving a breakout from the recent consolidation. If you look at the chart of DLF, DLF is on the verge of giving a decisive breakout. Like if it sustains above 780, there will be a strong rally towards 850, 875, 900 in the short to medium term. Short term, in fact. And on the lower end, support is there at 764. Till the time it is remaining above the 764 level, I think sentiment is likely to remain positive.
All right, that is DLF on the charts. But coming to you, Kanishka, Canara Bank is the name that you have picked out for us. Tell us what's the news flow on Canara Bank.
That's right. So Canara Bank is in focus because its asset management arm, that is Canara Robeco AMC, that has announced plans for an IPO of nearly 5 crore shares. Now, the issue will be an offer for sale, that is OFS only, with Canara Bank offloading about 2.6 crore shares and its partner Oryx Corporation Europe selling about 2.4 crore shares on the other side. Now, since this listing is a pure OFS, the AMC itself won't receive any funds. Now, the street, of course, is going to watch out for the impact and also if it can unlock any value for Canara Bank, and hence this stock is in focus, trading 0.5% higher as we speak.
Okay, so that's Canara Bank for you and the fundamental news piece surrounding it, because of which the stock is up 0.5%. But shifting focus to the banking sector then, and Rupak Axis Bank, the stock is up 1.5%, 1121. Where do you see the stock headed on the technicals? 1150, 1200, will that be the first target?
For me, Axis Bank has started to fill the gap that was created back in July. I think the stock needs to sustain above 1125. Once the stock sustains above 1125, the stock is likely to move towards 1155 immediately. Then above 1155, the stock might move towards 1200 kind of level. So for the short term, the stock is looking good. For the medium term, the stock is looking good. For the long term, the stock is looking good. On the medium term chart, the stock had recently found support at the rising trend line, and it's on the way to towards 1200 in the short to medium term. So overall, the stock is looking very good.
All right, on that note, we need to slip into a very short break, but we'll discuss many more buzzers on the other side, so don't go anywhere.
Welcome back. You tune in to Market Fatafat, and let's move on to some action coming on the primary market. A new kid on the block, Jin Kushal Industries, Abhinav Jain, promoter and director, and Sumit Kumar Berlia, who's the chief financial officer of Jin Kushal Industries, who spoke to ET Now. Let's go across and take a look at what they had to say about this IPO.
The whole entirety of global used construction market is quite big. It's, as per Carriage reports, it's about $132 billion in 2024, expected to grow with 6.0% CAGR to 177 or something odd billion dollars in 2029. That's about 10 lakh crores to about 16 lakh crores. That's a pretty big number. So what is happening over here in this industry is that we buy second-hand machines from this exact market size that I just told you, and we refurbish them in our designated and owned refurbishment state-of-the-art facility in Raipur, Chhattisgarh. And we have other partner refurbishment centers as well, just like how 3PL players rent out warehouses, etc. in other places. We rent out workshops and refurbishment centers in other places to make our operations efficient and scalable. So we buy used construction machines, we refurbish them in one of these centers, and then we have a good B2B customer base segment all across the world, across more than 35 countries. And we export to them as and when, you know, the orders get executed.
My sense is that from the RHP that you do a maximum export to Mexico. Is that a geographical risk for you in that sense?
Well, I believe all the risk factors have been adequately disclosed in the RHP, but I would like to add on that in financial year 2022-2023, we were about 30% of our revenue to this particular country of Mexico. But over the years, as we grew in our business, as our vintage grew as well, as our experience and expertise grew, we took a strategic call that we are getting better margins in Mexico as a particular country. And we started shifting our export revenue to that particular country to add on to our bottom line ultimately. And we are a Marwari Jain family, so we really focus very much on the bottom lines, and that's what drives us. So we took a strategic call, and from 30 to 70-75% of our export revenues are being coming from Mexico now. And there's a very good reason for that because of the fact that the bottom lines are being contributed from that country. We, however, have exports in Europe, including UK, Netherlands, Belgium, these countries, and there are other countries that add to our export kitty as well, including Australia, some part of South Africa, Canada, Dubai, of course. So that's pretty much it.
Which are the segments that you cater to in terms of verticals there? Any particular vertical that you cater to?
So we cater mostly to the B2B side of the ecosystem, and whoever are our customers are primarily B2B wholesalers, importers, and distributors or dealers in those particular countries who already have an experience and to import used or new construction machines, assemble them, put them back together, and then provide the last mile endpoint distribution or sales service, and then they are able to cater to their regional customers as well. Look after their pain points, any small things come up or whatever, and the same time zone, etc. So those are primarily our customer base. However, we do supply to end users and contractors as well on the retail segment of it. So, but the largest and lion's share of the revenue comes from B2B customers all across the world.
Give me a sense of how this market is growing, because 75%, nearly 75% of your exports or total sales is now coming from Mexico, and then followed by UAE and Netherlands. How is this market growing, and what is the kind of margins which is there? Because I will come to Sumit also on the margins front, but how's the growth in this segment from there? And given the recent trade wars which are going on, do you see that Mexico may be putting in some kind of higher duties on India as well?
Well, as I pointed out to the fact that earlier, we are a very PAT-driven company. Honestly, मतलब घर में बात भी होती तो it's just that कि भाई other numbers are backward-looking numbers, whatever, we don't care. Father, grandfather, everyone is just कि भाई ultimately पैसा घर में कितना आ रहा है, right? So we just care about that. And on a limited capital base, we have to understand the size of a company, the working capital involved in this heavy working capital cycle business was a particular pie, I would say, so far, right? So in that particular pie, sabse zyada paisa wherever we can earn from, the maximum amount of revenue, we just focus on that. So earlier we were 45% to Europe, so Netherlands exactly, around 8% to Belgium, around another 8 to 10% to UK. But these are countries which have a transit time from Bombay to, let's say, Europe of about 20-25 days, at 30 days at max, right? And then Mexico is a country where the transit time is 60 to 90 days. So this involves a heavy working capital for this business, but obviously it gives a much larger PAT level on an overall basis. So in our new construction machines, we get about new customized construction machines that we tailor make for our customers. That's about 2 to 4% on a PAT level basis. On used and refurbished machines, that's about 12 to 14% on an annualized PAT level basis on used refurbished machines. And we've recently launched our own brand as well, in which it's early on, it's first year of launching and operations, but we're expecting about 12 to 15% more or less on PAT level basis on that vertical as well. So, but the essential point is that these margins are very much obviously coming because of our strategic decisions taken about which charity to sell in. And farther away, by basic common sense and logic, that whenever you invest larger amount of capital for more amount of time, you get more return on investment or more profits on any particular product or business model. So as you said that we are not selling only to one country, so the geographical risks are pretty much mitigated because we already have vintage and history of selling about 50-60% of our revenues to Europe, Middle East, etc. earlier. And if at all, whenever the time comes, we can always shift back to that region again. But for now, there's nothing that's stopping at all. India is at a very good sweet spot globally currently. The world is looking towards India. The demand is growing. Indian engineering expertise is recognized and understood globally. And they really value I'm a mechanical engineer, my father's a mechanical engineer. So when we go out and speak to people, they understand what we do, what kind of expertise do we have. They really value that. So I don't think India and products and shipments from India are going to going to be hampered by any policies as such, because the demand is still there. As I told you, it's a 10 lakh crores market already in 2024, growing with 6.0% CAGR. So the demand will be there, the Indian supply is there, the engineering expertise and the global power that India has become is there. So I don't really see anything else stopping. And if and when time comes, we already have diversification where we have sold so much, we can really explore those avenues again.
All right, with that, it's curtains down on this edition of Market Fatafat. I'll take your leave. Thank you so much for tuning in.